Daniel, welcome. Thank you so much for joining us here at Risk Minds International. Can you share with us what you're seeing as the key trends at the moment in terms of sort of non-financial risk management and what the challenges are?
Sure, Emma. So as we've heard the last couple of days, the area of non-financial risk management is probably the area where there's most cause concern from a CRO perspective. There's been various surveys carried out, live polls carried out where the areas of conduct, of cyber, all the non-financial risks have taken a lot more prevalence over perhaps some of the more historical risks around credit and market that were very much more of a concern 4 or 5 years ago. Probably within the non-financial risk sector, the cyber issue is still very much top of the list. Cyber risk is dynamic, it's agile, it has challenges around quantification, it's constantly evolving, which is bringing a lot of pressure onto the banking sector. Having said which, the banks themselves are probably the most resilient industry in terms of the way that they're looking to manage these risks. There's obviously pressure from the regulators to make sure that resilience is maintained, but it's certainly one of the key risks around non-financial risk, as well as conduct. Still, conduct is a risk around how products are sold, the way that the processes are executed with the clients, and in the digital age we live in, the whole pressure around making sure products are fit for purpose and are sold in a fair way is putting pressure on the banks in non-financial risk. And at the same time, the banks are under pressure to make yield. They need to make money, they need to make a margin, so there's lots of competition. So the dynamic around non-financial risk added to the pressure around having profitable business is making it a tough time for banks right now. What
would you say are the key sort of characteristics of those that can mitigate well for those risks? What talent do you have to have within your company to be able to do that?
Good question. I think the one of the key issues is really around having data analytics. So although these are challenging risks, it's very important that the firm is investing in its ability to understand and quantify these risks. We welcome some of the developments around improving the taxonomy of cyber and non-financial risk. There was a paper produced last week from ORX, which was another step in the direction of having a better taxonomy befitting the non-financial risk sector, which is a good starting point. So having a common framework and a common data collection is a starting point to sound risk management. And then it's really around collaboration. It's around making sure that the firm from the top down is understanding the risks, is embracing the information that's being shared with them, and that information is being shared with them in a way that they can understand and move forward and take decisions from that information.
You talked there about the team from the top down, and it's a cultural attitude as well, and a sort of talent pool that you need in a company.
Absolutely. I think that's a very important point. I think in the old days, perhaps people would delegate these issues because they're technical to IT or CISO areas. And now there's a realization that every bank is a technology company effectively, and therefore there needs to be common language. It can no longer be someone else's problem. The information needs to be shared in a clear way, in a way that the banks can understand it, senior executives can understand it, and decisions can be made accordingly.
So that's a slight shift in sort of culture and personnel. Do you also see a shift in perhaps how institutions work together? Are you seeing more perhaps collaboration between risk and insurance, say?
Absolutely. So I think one of the insurance industry has a big role to play in this. I think where we see, you asked the question earlier about how does good look like really in terms of collaboration, and I think the insurance industry is there as not only to provide financial support for these risks when they go wrong, but probably more importantly to complement and challenge risk management in terms of right behaviours, the right culture within that firm, bringing more challenge around risk management. And I think the insurance industry has a sound capital base. I think at last stand, the reinsurance market is about $625 billion of capacity in 2019, and therefore that market needs to build products. It needs to be relevant to its customers, and there's good examples where those collaborations are occurring, where the banking and insurance industry are working together. But I think we're at the tip of the iceberg. I think there's a lot more opportunity as banks become more aware of the non-financial risks and they're getting better at quantifying them, understanding them. There's an opportunity for the insurance industry to play a bigger role. in supporting them around developing better products and supporting them around having a complementary ability to support the risk management frameworks.
So great opportunity out there, and perhaps an event like this is a great environment to start those conversations and have those meetings and collaborative conversations.
Absolutely, that's why we're here. So I mean, we support Risk Minds really because it's an opportunity for us to share with risk people how we see the insurance industry playing a greater role. And we want to make sure that risk and insurance work hand in hand to create benefits of both parties of the long term, and really play a real supporting network, supporting in the future.
Daniel, as always, great to hear your thoughts. Thanks for joining us.
Nice to see you, Emma. Thank you.